Good morning, traders. Welcome to today's market review. This is Razak at CMTrading. Today is January 22nd, 2016, and today is Friday morning. So looking at the economic calendar today, we've got a bunch of numbers coming out starting at 9:45 Euro number. ECB President Draghi will be speaking, so that's a major event, especially on the back of yesterday's rate decision. And then at 10 a.m. we have French flash manufacturing number, that's also a Euro number. And then at 10:30, German flash manufacturing number as well. And then at 11:30, GBP retail sales. It's a monthly number. It shouldn't have too much effect on our market. But then at 3:30 South African time, we have a Canadian dollar core CPI number. That's a inflationary number, and should be quite interesting to see how that affects the CAD. Okay, we've had a very exciting day yesterday, and as such, historically, Wednesday, Thursday, and Fridays are the best days to trading. The heart of that day is obviously Thursday, and that's exactly what happened yesterday. Looking at the Euro USD, we tanked over 100 points here, as you can see. We're looking at this move right here. We tanked. We were in this middle of this range, as we've been speaking about it, and really didn't have any conviction either way. But you knew that something was going to happen in either direction. Either it was going to go back up to 109.55 or go back down. Once the news came out, if you were able to catch this move, you were able to make about 100 pips on the way down. Now, historically, when we do have one directional move, there's usually what we call a fade, a correctional move the other direction, and that's exactly what happened. So if you were able and fast enough, and you didn't catch the first move, you certainly could have caught this second move, okay, which was this rally all the way back up, almost a 100 pip move, but then we sold off, and now we're back at the bottom of the range here. So question is are we just trading with this in this range still, or have we breached it by but what I do know is that we are still in this range. Above or below it, we're still going to be within this range, meaning to say, you know, if we close down below it, below this line, or we closed up behind it, then I would consider that maybe a breakout move. This move right here was momentarily, okay, it didn't close, you know, on its dead lows. It didn't close, so we may just rally here to this 109. You know, I mean, historically speaking, we are at a support level, so you may want to jump in a little bit, test its water, see if it's going to firm up and take off, and then add to the position, as opposed to jumping in full throttle. Looking at the USD CAD, big retracement yesterday, 146 to 142. That's a huge move, especially since if we look at a weekly number, that's the first time we've actually had, you know, this far of a correction at one time since April, okay? And that's a major retracement for the CAD. So I'd like to see some sort of correction because we've had such a huge rally, okay? If we look at a monthly, we're looking at a monthly graph here, and you see, you know, out of the past, you know, couple of years, we've only had 1, 2, 3 negative months. So we're still in the positive here, but the question is are we gonna, is it gonna correct itself? Has it exhausted itself? So not sure if this is going to be a new range for this particular pair, but it's definitely in an area that is correctional. Okay, if we're looking at the Dow Jones didn't do much yesterday, just a few points up, and just respecting and holding this support level at 15,497. The question is will we correct itself going into the February month and have a little bit of a rally, or at least a short covering rally. Looking at oil here, we're trading at $30.70, up from its low of $28 and a few cents. But at no means is this going back up to 100. Okay? The question is this just a short rally covering, meaning, you know, those that were short at 37 and 40. Are these guys covering their shorts and therefore driving the price up? So that's a question. Let's see. Let's keep an eye on that. Looking at the GBP Japanese yen, a big rally yesterday, over 100 pips. As we've seen ourselves, go down to 164. We've breached this 171, and finally we're finding some kind of footing at 164.94. So, historically it was. I can't say that this is much of a support level as much as somewhere between this level would have been support where we had previous resistance, and then we challenged it once, but this is all wicks, so I'm not convinced that this is support area. I would say between 164 to about 163-ish level would be support. So we're definitely hitting that threshold here after this big rally over the past 2 years, the Japanese yen getting a lot stronger, and here you could see the GBP making some ground. So positive news for the GBP. Between the GBP and the USD, GBP USD, obviously the GBP Japanese yen a little bit more volatile, so that's the go-to pair between the two. Looking at gold, we kind of tapered off a 1098 here, just as we end off the week with a weaker market. So those are my trading thoughts for today. This is Fred Razak at CMTrading. I want to wish you guys a great trading day and a beautiful weekend. Thank you.